Our world is rapidly changing. The concept of being a cashless society is looking more plausible every day. So as a young adult learning how to manage your money, get your first credit card, and start applying for your first loan, what are the basics you need to know? One important term is credit score. A credit score is a number that rates how likely you are to pay your debt back. This number determines if you could get a loan or not, and the terms the credit lender can offer you, and even the interest rate you pay. Having a lower score can make it harder to get a loan, rent an apartment, and even make your insurance rates higher. There are many types of credit scores out there, but one of the most common credit scores is a FICO score. The lowest or the worst possible credit score is 300 points, while the highest score possible is 850 points, which classifies as a perfect credit score and is achieved by only 1% of consumers. Generally, a very good credit score is one that is 720 or higher. Ideally, you want to be in the range of 670 to 850. So how do you get your credit score to land there? Well, unfortunately, you won't start with a high score. Everyone starts with a middle-of-the-road to low-range score and has to build good credit numbers over time. Factors such as payment history, outstanding balances, length of credit history, number of applications for new credit or recently opened accounts, and the different types of credit accounts you have, such as a car loan or a credit card, all play into the calculation of your credit score. It actually can take between 3 to 6 months of regular credit activity for your credit file to have enough data for a credit score to be calculated. Generally, a young adult will likely have a lower credit score than an older person. That is because the length of credit history accounts for 15% of the credit score. While length of the credit history is important, the biggest piece of the credit score pie is payment history, which makes up 35%, closely followed by the amount of debt owed. So when it comes to a credit score, how do you start off on the right foot? First off, begin with the future in mind. For example, every time you apply for a new credit card, your credit score goes down. While you can make back points relatively quickly, applying for credit cards strategically is better for your overall credit score. Another factor to consider when applying for a card is its annual fee. While a card that doesn't have an annual fee might seem like the best option at first glance, these can be hard to come by for new borrowers, and benefits such as a large introduction bonus, travel perks, or a higher cash back rate might offset that annual fee. For example, a card that earns 10% back with no annual fee will be more profitable than a card that earns you 20% back with a yearly fee of $100 up to a certain spending point. So it's important to be realistic in how much you will spend or put on your card in a year. Secondly, use your card regularly. Charging small amounts like weekly commute expenses, grocery tabs, or a small bill to your credit card, and then paying the full balance off monthly is a great way to start. It is the easiest way to expedite your credit building process by showing you can handle credit extended to you responsibly. However, you can also build credit by simply having a credit card, whether you use it or not. While this will build credit slower than paying off a monthly balance, both will build good credit scores. Finally, use your credit card responsibly. Avoid things like paying your bill off late or maxing out your credit card. This means spending the full amount of allotted credit on your card and letting the balance roll over to the next month without paying it off. Both maxing out your card and paying your bill late will make your credit score go down. So, in review, having a good score can both save you money and make you eligible for more opportunities in the future than having a low score. The biggest factor in having a good credit score is your payment history, closely followed by the amount of debt you owed. So don't charge more than you can pay back. And lastly, just owning a credit card can help you start earning a good credit score, which in turn will make you more financially prepared for your bright future. So what are you waiting for?
This financial literacy video was brought to you by a grant from the Ohio Broadcast Educational Media Commission and WBGU-PBS in consultation with the Ohio Department of Education. For more videos in our financial literacy series, please go to WBGU.org.